Now we'll welcome on stage a very fascinating panel. You all know that payment was the first disruption in fintech. I mean, many things are new. Many people think fintech is new. I was in the bank in 1999, and it was already the first neobank created ever in France with 120 million euro budget. So it's not new, but payment was the first race with PayPal and so many other ones. So when we see all that and all this fintech, the question is, can all these these old players cope with the pace of all these new players? So I'm very happy to welcome in a few seconds on stage Nicolas Huss from Ingenico, Executive VP of Ingenico, Geer, CEO of iZettle, the European unicorn on payment we have, Gardner, CEO of Marqeta, I'm sure a future American unicorn on payment, and Gajda, a Senior VP Innovation and Partnership of a very small fintech company called Visa. So please, their turn to be on stage. Hi. Please take a seat. Hi. Hi. Take a seat. I just keep this one for me. The rest, do what you want. So first I have to say that all these very nice speakers are very courageous because I never send them the question. So thank you very much. And if you don't like my question, come with your answer. We can play that later. First of all, I know very well who you are, but I think perhaps it's not the case of everybody there. We will do just a 2-minute each. Present what is your company, what you are doing, or the key figures. I'm not sure everybody needs for Visa, but do it, whatever. So please, Jason, first, and we do like that, 2 minutes each. Maximum, 1-2 minutes.
Thank you, Laurent. Jason Gardner, founder and CEO of Marqeta. We're an open API for issuing and processing credit, debit, and prepaid cards. We have native integrations with the networks, including Visa, which means we are a core processor in that Visa's hardware sits inside of our data centers. And we're the first company of its kind to actually deliver a core processing solution via an open API, which gives companies, specifically in the B2B space, think of us as infrastructure or Intel inside, for them to build all kinds of products, whether they're physical plastic cards, could be contactless cards, tokenized cards, which could fit into a mobile wallet like Apple Pay, Android Pay, or Samsung Pay, or instantly issued cards that are virtual and then drop those into any one of the mobile wallets. We are natively issuing within the United States and Canada, and we'll be operating within Europe in the second half of the year with help from Visa and others. So excited to be here. Thank you.
Hi, I'm Nicolas Huss. I work for Ingenico, and I'm in charge of what we call the retail business unit. So maybe most of you would know Ingenico for the terminal, the point of sales payment terminals where we are global leaders. But we also have a service activity which would represent 40+% of the revenues, where we do a lot of processing, acquiring with a lot of very different merchants, retailers, global online players, a lot of SMBs, small companies also. So that's what I do. I've joined Ingenico a few months ago, and prior to that I was with Visa for a few years. So probably last year I would have been on Bill's shoes, and I'm very happy to be on the other side.
I'm Jacob de Geer. I'm the founder and CEO of iZettle. iZettle is a sort of leading European and South Latin American commerce platform, specifically targeted for small businesses. We started off as a mobile payment solution back in 2010, expanded across 10 European markets, and today we have sort of more of a full service offering for small businesses to basically compete with the bigger companies out there, with everything from payments to working capital to analytics tools, etc. We're currently across 12 markets, or Europe, 10 markets, and Mexico and Brazil, and roughly 500 employees.
Thank you.
Bill Gajda, I head up innovation and strategic partnerships for Visa for Europe and CEMEA. For us, that's a network of innovation centers globally, but here in Europe, our headquarters in London, a design center in Berlin, an office in Tel Aviv that focuses exclusively on fintech, engagement, and more recently, an incubator in Stockholm to focus on the Nordics. I'm actually really glad to be on stage because all of these companies and all of these people are very close partners of myself and Visa, including a former boss. And so this is a kind of a comfortable space for me. But when I look at this panel, Visa has either partnered with or invested in or both, all of these companies over the past 3 to 5 years as we think about our own fintech strategies. And so it's good to be here in Paris today.
Thank you. So first, I have to mention that I had the idea of this panel thanks to Jacob. I'm traveling a lot to organize this forum, and more when I'm paying with my card, providing that the country accepts cards, which is not always clearly the case, even in Europe, but more and more I was paying on the iZettle terminal. And of course, everybody knows iZettle for long, but really it's becoming mainstream. And I was thinking, hey, I'm French, and Ingenico is a big champion in France. I have a terminal in Ingenico for my company, which is nice, quite that size, nice. And I was going in cab in London, in Germany, and also in Brazil and so on, and I saw things like that. Very tiny, easy to use, quick to deploy, and I say, whoa, will they survive? We were the champion 20, 30, 40 years ago in payment because France invented the chip card and so on. Will we stay? So, and I met Jacob in Munich, and we had decided to do this David and Goliath stuff, which is more to say, okay, incumbent and new players. So David, give us a bit more information about what's the path you have been through in the last few years, and because you say you do plenty of services for SMEs, but what are these different services? And some KPIs, because I'm not sure everybody knows more than me. I mean, iZettle, for many of us, is just a small terminal, but all the things you are doing and a few KPIs.
No, but I think it was when we met in Germany, I think it was interesting to kind of gather a panel where, sort of call them incumbents or whatever you like, but historically there was some sort of an aversion between sort of the incumbents and companies like both Marqeta and probably Marqeta, but especially like companies like iZettle, because everybody saw each other as sort of tough competitors or potential competitors. And in some of the panels with some of your colleagues from Ingenico a couple of years ago, everybody kept laughing at what we were doing, and it was not an interesting segment, and so on and so forth. And seeing sort of the development on your end, it seems as though we're getting closer and closer to one another. So hence the reason for having the discussion on stage, which I think is interesting. But from our perspective, I mean, we have been pretty straightforward all along with schemes and everybody else. I mean, our view of the world is that hardware in payments is being commoditized. We've had that view basically since day one. So for us, terminals have never been sort of a big part of our business, apart from the fact that it's an enabler to take payments. But our entire view of sort of the payments product that we're bringing to market is that payments is the fantastic sort of backdoor to any merchant to leverage the true goal, which is data, on which we can then sort of develop nice services on top of, not neglecting the fact that payments will remain relevant. So everything that we do these days is obviously centered around payments, but more and more sort of creating the next generation of services that can actually help the small businesses of the world grow to the next level. And the reason why we find that important is that, the world is changing. So the backbone of any economy historically over the last 100 years has been the bigger companies. They've had all people employed and providing taxes to governments, etc. And now that whole dynamic is changing. A lot of people are losing their jobs, moving to low-wage countries, for example. Robotization, artificial intelligence, etc. will kind of increase that process. And typically, across most markets, nobody really cares about sort of the backbone of society, which is actually the small business segment, 1 to 10 employees, 96% of all businesses, and 30 to 40% of the GDP in any given market. So our ambition is, and our mission is really to help these companies to grow and to be able to sort of not fight the big companies, but at least level the playing field. So that's how we go about it.
Just because you said from the beginning, can you remind us when you created the company?
Created the company back in 2010.
2010. So you are quite a big guy now, 8 years.
Sorry?
You are a big guy, 8 years.
Exactly.
Almost old.
Some sort of twin, I guess.
And at the beginning, it was only terminals.
In the beginning, it was the ambition was to democratize card payments, to make card payments available for anyone, whether you were an individual or a small company. Because at that time, the typical business model around card payments was that you had to sign up for a contract with a big bank. For example, you paid a setup fee of €1,000, and then they locked you into a 36-month contract, and then on top of that, transaction fees, which is great if you're a bigger company. But if you sell Christmas trees once a year, or if you go out to trade fairs a couple of times a year, or if you have the smaller cafe, it doesn't really make sense, even though you really need sort of card payments from an economic perspective. It didn't really make sense for the vast majority of the smaller businesses. So that's how we entered the market.
You entered the market, but I think it's when? It's 2014 or 15 that you shift to other kind of services with data added value. When did you do the shift?
Yeah, around 2014, because that's when we had managed to get sort of a scalable business with enough merchants that it started to make sense to develop sort of the surrounding services. I think still one of our core assets and core competencies lies around sort of regulatory and onboarding. I mean, we onboard 1,000 small businesses per day, become new customers with iZettle across our 12 geographies. And doing that in a heavily regulated environment and being able to onboard them online in 5 minutes real time as fast as you can type, so that's the core of what we do. And then based on that process and risk, we can then develop adjacent services.
Nicolas, when we met first, it was like 6-7 years ago, I think, or 5 years ago, sorry, for Visa. I remember some discussion we had about the fact that 15 years before, PayPal was small, and now PayPal is a real threat for Visa. We can discuss that later. But do you think iZettle could be tomorrow as threatening for Ingenico that PayPal is now threatening, if I may say, for Visa or MasterCard guys?
I guess to your question, and listening to you, Jacob, we've known each other also for years. I think the way I look at it is 2 steps, if you allow me. The first one is, in our industry, you should always be humble. So if someone laughed at you at some stage, because these guys had no clue of what was happening, and the evolution goes very fast. Therefore, wherever you are, you need to stay focused and keep delivering value. Otherwise, you're out of market. That's the first thing. The second comment, if I may, is that having started a lot of businesses in my life, but also having dealt with a lot of different startups, especially when I was at Visa and even now, you have different levels of difficulty. The first one is get out of the ground, start working, start delivering, selling the products, have them accepted, and then you need to grow. And then you become at a point where you yourself become a target and others would attack you. So to your question, answering now to your question, I guess that, of course, what Jacob and the team do and other players worldwide is now a reality. There was a time where some merchants, the smaller, were not really covered from a physical perspective. For all of the good reasons that you have explained, this has now changed. But today and tomorrow, it will be a market, and therefore everyone will be competing against that, which means that you will have less margins, and you will need more scale yourself. That's the difficulty. And if I may, if you give me another 30 seconds for that, personally, having spent some of my life on the issuing side, spending a lot of time with retailers and merchants on the scheme side, and now as one of the industrial service provider, I don't really see it as David against Goliath. And I think what you had in mind was like innovators versus old-fashioned companies.
Incumbents, and okay, to be very honest, I had Philippe Lazare on stage at the first Paris Fintech Forum, 28 January 16. And at this time he explained us that doing large volume was not so an easy thing, and it's good for fintech for low volumes, but large volume, you have big plans, 3 years plan to develop a product and so on. That's why I was thinking, is it agile enough compared to people who can launch a product now in 3 months and say, okay, now we do POS, let's do also small and medium business lending because we are good at that, and you decide that in 3 months and launch it in 4. Can you So it's not old, incumbent, whatever. It's big companies with perhaps big process compared to new kids on the block. Sorry to say that like that.
So this, I think, drives two answers. The first one is in payment, scale is a necessity. So at some stage, you need to grow. Otherwise, you lack competitiveness. And I think that, for instance, Visa, MasterCard, and some of the big players have been very successful in growing year after year, and that's a very difficult recipe. The second one is that I wouldn't believe that it's small against big. The way I look at it is that we should work together alongside. My bet, and that's why I joined Ingenico, is that the center of gravity is shifting more and more to the end consumer, which wasn't the case for years in payments, and therefore to merchants. And if it's the case, we should focus less on scale and processing capabilities and more on adding values. Adding value means that you need to address a lot of verticals in a lot of different geographies, and therefore new players, more established players can work together and can address different needs from different merchants in different places.
Yeah, Laurent, another point I would make, and whenever I talk about innovation and what's happening at Visa, I make this point, that all of these large companies, and Visa's not that large, but let's call it an old established company, or our bank partners or large merchants, all of us have got to get used to working at two speeds. So on the one hand, that soundness and security that Visa provides, 7 nines, 24/7, never loses a transaction, 100,000 transactions a second, we need to continue to do that, right? Or all the trust goes away, the brand disappears, et cetera. And at the same time, we need to develop that new muscle, which is agile development, iteration, succeed or fail quickly, integrate new partners, open our network through APIs to partners. And I'd say Visa's halfway through that journey of learning those new muscles and learning to operate at two completely different speeds with different talent, a different ethos, right, different technology. I think this is the challenge for all the incumbents is how to operate at two speeds.
Jason, you operate in a quite different geography. Tell us about your vision about this. Okay, David, Goliath, whatever you want, incumbent, startups. What in your geography where you're operating? What's your feeling about it?
Well, I mean, it's similar to Jacob, started the company back in 2010, and the notion for it was that there are actually all these companies that haven't been invented yet. They're going to want to get access to open APIs, and back in 2010, nobody really understood what an open API was. And the thinking around that was, and I've talked about this before, is really kind of access to the metal, getting direct access to the platform itself. And an API, or application program interface, really allows software developers to control how their interfaces that they're building will interact with the system itself. And the thinking is that these companies that haven't been invented yet are really going to challenge the status quo, or even large issuers at the time. And I had built another company in the payment space on the acquiring side that was specifically handling rent and lease related payments, and had become really fascinated with the cards themselves, where the 16 digits go, and really discovered the 16 digits are almost like an IP address when a card is swiped, you couldn't even tap phones at that time. It was just really swiping cards or inserting cards. Would generate was called an ISO 8583 message, which is still the global standard today. And that was sent to these very old companies that were anywhere from 15 to 35 years old. And our thinking at the time was there's going to be a lot of competition for these large issuers. For the simple reason is companies over time, especially in the technology space, are focusing on new constituencies. Like similar to an iZettle or an Ingenico. Ingenico is established large merchants. iZettle really looking at the mobile merchant and using the mobile phone to go after a space that had been underdeveloped. I think when iZettle and Square in the U.S. and others came on, increased the ability of card transactions by 40%. That was pretty amazing. And when at the time we were building, we felt that there's all of this innovation actually going on at the point of sale, but nobody is innovating whatsoever on the issuing processing side, and we had talked about before he came out on stage, You have Ingenico, which is, or you have iZettle, which is the front-end hardware. You have Ingenico, and specifically Nicolas is in the acquiring processing space. And then you have the scheme and Visa, and then you have the issuer processor. I mean, if you think about over time, like how we've actually stacked that, we all talk about innovation to really to solve these new business models that are popping up every day. We see companies like Revolut, kind of challenging the banks. They're called either neobanks or new banks.
Nicolas was there yesterday on this very same seat.
Yeah, so you look at these models, and back in 2010, I think we were all right in trying to figure out what the next generation of companies were going to look like, specifically in the financial services space. Even today, 85% of the world's transactions are still in cash. You have 3 billion people who aren't even involved whatsoever in the financial services landscape. And this idea of innovation is really to service those folks in a way that allows us to really kind of build this infrastructure out. And you're seeing it happen today. You talk about India pulling the 1,000 rupee bill out of circulation, Canada talking about by 2025 going cardless. This stack and this ecosystem on stage is really meant to service that going forward. So whether it's a year from now or it's 15 years from now, this is still going to be intact. But how the authorization happens, or the identity management, or the issuing processing will change. But the infrastructure that's been created in the stack is really not. It's just going to be servicing these brand new companies that are servicing these brand new constituencies that need this infrastructure to operate.
Still on you, sorry, Jason, but you have quite a big growth these last few years. But how do you manage with so many established players to take market shares? I mean, with all these big guys already working in your industry.
Well, we hear it a lot. I mean, like even the last 2 days here, I've had a lot of companies come up to me and said, "Oh my God, we looked at your API. Our tech people were really blown away." And in many instances, the CEO of the company is an actual developer, and they see us as the intel inside or the infrastructure where they have better control. I would say one of the things we did, which is very fundamental to our business, is we created a technology which we call JIT, or just in time, and this allows us that when a card is swiped and the ISO 8583 message is generated at the point of sale, and that basically creates all of the payment details other than the SKU level information. It reaches us. We actually package that up and we deliver that to our customer, and our customer is essentially authorizing their own transactions. They build their own, let's call it an API decision engine of sorts, where they have all of this proprietary information and algorithms to ultimately make a decision of whether to authorize that transaction or not. So how we compete against the incumbents is the incumbents, the system of record has always resided with them. The infrastructure has always been with them. We bring outsourced infrastructure. We like to refer to our model as like Amazon Web Services or AWS. For issuing and processing, so similar to what AWS has done for hosting for companies. So instead of having to actually build all of your own hardware infrastructure, you can outsource that to AWS instead of becoming an issuer processor. So instead of actually building all of the technology and the hardware and the software and getting certified by schemes, networks like Visa, we now give you the ability to be an issuer processor without all of the infrastructure. So that's probably the primary way we compete, because now all of these companies of all sizes can really become an issuer processor without managing all of that infrastructure. I would say that's definitely primary. And number two is this native API first instead of APIing up a kind of an old infrastructure.
You just mentioned at the beginning that you work closely with Visa. So tell us, it's a good example for us of partnership because everybody says we partner. So let's be concrete. What are you doing together? You just mentioned we'll go to Europe thanks to Visa help and so on. So perhaps you can build some information.
Yeah, so again, we work with all three companies, but when we think about Marqeta, because it's API first, and that's what I'm going to build on, is you have to think about companies like Marqeta. It is certainly large merchants that want to think about developing issuing capabilities, but a lot of it is incumbent banks that want to build their own prepaid platforms or neobank capabilities. And so the way we see Marqeta is really this kind of issuing processing platform of the future where we don't have to hardware the next 10 use cases. we can use their API-driven strategies to say, we can develop, new customer experiences, and very quickly deploy them and test them. We can add that orchestration layer, that middle layer that he talks about on legacy systems, if that's where they are, to provide that flexibility, time to market, ability to consume APIs. Visa has its own developer center. It's only 2.5, 3 years old. We were not able to either express or consume an API except for the last 3 years. That's true for a lot of banks as well. And so, Marqeta for us is really, in many cases, that middleware platform that allows new entrants and existing entrants to connect to some of the partners here and others through their API-first platform. So they're an important platform for us.
Jacob, you just mentioned before that it's now a commodity to do terminals and so on. So you do many other businesses, like lending and so on. First question, Nicolas mentioned that it's very hard to make big margin payments, so you need big volumes. Today, in your revenue sharing, what part is something else than just a terminal and transaction? What part is on lending? Can you share data on that, or you don't share data on that?
No, typically we don't share that, but I would say that, to be very honest, either we sort of subsidize the terminal or we give it away at cost. So we don't really anticipate any sort of margins from hardware already today.
Just an entry point.
It's just an entry product.
The money is after on data and lending and perhaps other limits?
Lending for us is a consequence of data. The reason why we're doing it is that the segment that we are addressing, the sort of solopreneurs, one single employee up to 10, 15, they typically don't get the opportunity of finding working capital from the banks because they're deemed way too risky. So it's a completely underserved segment in so many sort of financial services aspects. And when we ask them, what is your main pain points for growing your business? First is, we need payments, and they can find payments in many different places. Second is, we need more customers, like any big corporation. And third is, we need working capital, because we can't access it anywhere. And for us, working capital is based on the data that we collect from the payment, because rather than many of the traditional banks just assessing risk based on your last year's performance, basically. We assess it and we use sort of machine learning for understanding how a merchant will be performing in just a couple of days, comparing them to their peers across different markets in their current market and cross-referencing with similar customers in the near proximity, but also others. And then through that sort of comparison, we can then assess the risk. Can we provide them with working capital today, and can we expect to get it back tomorrow? And it's not sort of the traditional lending way, but rather we increase the transaction fee, and we use that increase in transaction fee as an amortization and a way of paying back the loan, basically.
What's your limit in the additional services you can provide to SMEs? I am an SME. I could have plenty of financial services, but perhaps you don't want to do everything. Do you want to insure me? Give me an insurance? Do you want to, I don't know, plenty of other financial services we could have in mind? Do you have limits, or you just listen to your customer base and you develop if there is a need?
Pretty much we listen to our customer base, but there are so many things that they need. So whether it's sort of small business insurance is sort of the next logical step, or if they're sort of lower hanging fruit, I'm not really sure. Quite frankly, my first company that I started back in '99 was an internet sort of advertising company, an affiliate marketing company, and the big thing back then was really connecting ad spend to return on investment online. And now, effectively, what we potentially could do is do that same sort of connection and closing the loop from online to offline. Finding customers for a local bakery or a local retailer is their number one core pain point. There are loads of challenges that needs to be sort of solved for this target segment.
Nicolas, in your company, you are, to my understanding, much more focused on payment. You don't do this kind of project. Could you open tomorrow to more needs, or you want to stay focused in Ingenico on payments?
No, we do a lot of products. So on the part that I run, we do a lot of these, like adding value through data and etc. What we don't do, at least yet, is all of the financial services.
Yeah. You do many products, but all related to payment, fraud management, data. But you don't do lending, or you don't want to do insurance, or at least not now.
Yeah. But yeah, we might do it tomorrow. It depends exactly, as you were saying, on what our customers are asking us. But to Jacob's point before, what I was thinking, listening to him, is this is the complexity in payment. So you start by being a startup on a specific vertical, you find your market approach, you do it incredibly well, and you're very different from the others. And then at some stage, because payment is, it's a difficulty that we have. Sorry, I'm not picking on you, Jacob, I wouldn't dare.
It's okay,
but
I can take it.
The point is that then you need to answer your client's needs. You need to go one product A and product B and product C, etc. So it's adding a lot of complexity. If you can't do it by yourself, then you need to partner with someone. And that's part of the answer, which means there are room for a lot of us because payment is growing very fast. So we can still do much more together, but that's also part of the challenge. Where do you lose your soul? Where do you stop being so different from the others and start beginning one of the others? And I think that's what I see as a challenge for all of us in payment.
Bill, I know you said you are like a small fintech, but for everybody, Visa is quite a big company. I must say, perhaps the first fintech long time ago, but now you are quite big. In your field, we hear many people saying many small fintechs, sometimes bigger, not the guys here, but they could replace a scheme. We could get rid of scheme and be cheaper. We had people saying on blockchain we can get rid of SWIFT. I was not with our friend Gottfried earlier today, but I know the discuss of that. And I see many times in the fintech field, we receive 800 applications. And on the 800, not so many, but some of them were still saying, we could get rid of Visa and MasterCard. We have a new scheme, much cheaper. You don't pay for every single message. You don't pay for whatever. Okay, I don't go in all details. Same question to Nicolas. Do you sometimes fear that, or these new people, or you think that now you are too big to fail?
I don't think we're too big to fail, and I think to the points that were made, I mean, the risk that any incumbent has in fintech or financial services today is thinking that you can stand still and rely on past success. And so one thing I'll say about the ecosystem, replacing as things move to cloud and as technology becomes cheaper, when we think about the Visa ecosystem, its foundation is a whole bunch of servers and Cisco routers, and that's important to us. But it's really the ecosystem of 3 billion cardholders and 60 million merchants, that derives the ecosystem. I think that's the barrier, to entry or the barrier to scale that any of these new technologies have. When I started at Visa almost 8 years ago as head of mobile, it was the mobile operators who were going to use mobile technology, their networks, to replace the incumbent schemes, and that didn't quite work out as they planned. More recently, it was Bitcoin and this low-cost algorithmic, and that's not quite working out as it's planned, and in fact, we've invested in chain. We like Bitcoin blockchain rather, because we think it has some capabilities over time. So we think that most of the innovation that we see today want to find ways to add the flexibility to the scheme. They like the scale of the scheme. They like the fact that 3 billion anonymous buyers and 60 million anonymous sellers can meet around the world and conduct commerce. That's hard to replace. But then we do have to figure out how we bring new players into the space, how we remain agile, how we expose more APIs, how we take some services that are embedded in an old transaction and take them out and extend them in new transactions to continue to drive down cost and flexibility. So I like where Visa's situated today, and we've got to move very, very quickly as new players come in.
Yeah, we actually hear this. We get approached by companies all the time, blockchain, and I just tell them you're, spewing a bunch of nonsense. Like, think about the, Visa and MasterCard, Discover, American Express, CB here in France, or Gyro in Germany. How would you go and actually replace? It's like replacing the Paris Metro. Decide, like, I'm going to go out and replace the Paris Metro. or in the United States, rebuild Southern Pacific Railroad or Northern Pacific Railroad. And on top of that is, how do you get 24,000 banks all to agree on a settlement standard? So I think, to Bill's point, like, eventually it's going to come, but is it the next year, the next 5 years,
it's a long
the
way.
next 10 years? It's a long way away before that's going to happen, because if you have probably 100 different schemes around the world, a lot of them are managed by in country themselves. But to say that you're going to create a new protocol, whether it's blockchain or mobile, and you're going to link all of this stuff, forget about the regulatory environment, which is enormous in and of itself. We're just trying to get, especially here in Europe, just to get open banking and solve PSD2. How is the rest of the world going to decide on what the standard is going to be for all of these things around payments? I mean, it's such a big concept to sort of replace or think about replacing a Visa. It's so far down the line. It's like really unthinkable at this point.
So it's more for Twitter news than for reality for a long time now.
Yeah, it's nonsense at this point. That's what I think.
As you're speaking of difficulties, I must say I'm wondering how you do, Jacob, to sell your device and services to so many small points everywhere. I mean, sometimes I am in a very secluded place, could be a beach or whatever, and the guy has an iZettle terminal. So you could say, because people know us and come to us, but on the opposite, when I'm taking a cab in some country, not to mention Germany, we like only cash, and when I ask them, why you don't have a terminal, they say, oh, because my bank is too expensive. Don't you know iZettle? What's that? So not everybody knows you. So how do you manage? Is it what are the acquisition costs to go in so many small points? I'm sure you won't give me the acquisition cost, but give me some information.
I won't give you the exact acquisition cost, but I think that is sort of coming back to some of the core strengths that we have built over the years. I mean, we're not the best in terms of processing payments for the H&Ms and the McDonald's of the world. It's not our sort of core competence, but rather being extremely efficient and actually finding and attracting these small businesses that the industry previously hasn't really been able to attract. I think that's really where we excel. So it's a combination of primarily, I'd say that over 80% of our customers we find online. And if you compare that to the traditional sort of payments player, I would probably say that historically, at least 80% of their customers is probably found on sort of from people on the ground.
I can assume in 2010, funding this customer online acquisition costs were lower because keywords were lower price and so on. But no, you are not the only one. I assume acquisition costs continue to grow. You just announced a big funding round, didn't you? How much money did you raise recently?
We raised 40 million euros just prior to Christmas.
On the valuation, which is above $1 billion, is that or something like that?
Dollars, yeah, I think so.
Yeah, it's good for euro, you cannot mention anymore. So my question is, on all this money, majority is more for tech development or still to acquisition costs because you need to be much more countries and so on?
Yeah, so the way we view the world is that, again, this whole segment that we're addressing is so underserved. And low numbers looking at Europe, I would say that we have probably 15 to 20 million merchants still that we can address with our solution. But like any company, and we will go after the customer, and then it's a question of how fast we can get sort of return on investment. But we can either choose to sort of slow down the growth or acquire the customers, and given sort of our very low sort of churn numbers and the fact that they seem to like our product, we could either invest today and get returns tomorrow, or we can sort of slow down the pace and wait for other competitors, whether it be Ingenico sort of going down further down the value chain or sort of US competition to come in and sort of drive prices. And sort of the strategy from the company and sort of the clear ambition from the board and the owners has been go full speed ahead, and that's what we intend to continue doing.
Nicolas, even if I know you do a lot of innovation also, you do many things, you still have a big base on producing terminals. You just mentioned it was a commodity now. Commodity is also a cost. what could be the impact of pin on glass change that is coming soon and on all what you are doing? Because you have very secure terminal, you were the best in class when it was only pin on chip, so Square cannot come in front or whatever, okay, protection. But I heard that things are changing. Perhaps you can tell us a bit more, Bill, about this pin on glass, but my understanding is things are or will change one day or another. So
maybe I would add, Bill, to provide some context before. Yeah. It's always a touchy subject for me, because when I joined Ingenico in July, I was the one that signed the Square pin on glass pilot in the UK in my last role at Visa.
So
I
you
was
cannot
the guy
speak
to
on
blame
anything
for everything. So, but Bill, if you want to provide more context, and then I'll tell you our perspective at Ingenico.
I have to apologize, I didn't use the question before. So.
No. So pin on glass is basically, Visa's worked on a standard where we want to allow for payments acceptance using the mobile phone only. So you would be able to input your financial PIN on the screen of a mobile phone. That has not been allowed up until
Let's
today.
mention for the non-specialists in payment that it's totally forbidden until now.
Yeah, because of PCI standards, securitization of PIN pads.
And that's why everybody speaks of Square abroad, but not here.
Even these iZettle solutions or other solutions today have really had to work hard to solve these PCI compliant PIN pads that they would add to a mobile device to enable payments. And it's driven up cost, it's a different consumer experience, et cetera. And so Nicolas did sign, just before he left Visa, the waiver that allowed Square to launch their PIN on glass as a trial, to test both the security and customer acceptance. But I would just say generally, and I don't, and Nicolas is going to do a better job of this than I am, is all of the incumbents that think about the point of sale are fully involved in its transformation. Whether that's changing in form factors, going up or down market, moving from physical to cloud, building services on top of hardware and moving their business to service. If people said, what is the one thing that you think is driving innovation in payments the most, it is the complete transformation, or maybe even in some cases the elimination of the point of sale. And we spend a lot of time thinking about that, and I'm sure all these guys do as well.
So your turn, Nicolas.
Yeah, and Jacob, help me with that, because I'm certain that you have a perspective. My view is that accelerating changes and making it easier to pay is good for all of us. Having said that, we need to make sure that we keep respected the fundamentals that made payment very efficient and growing very quickly in terms of reliability and security. So as long as we have that, we feel that it's a good bet, and we need to make sure that it is successful in the implementation.
Jacob, you want to react?
Well, I agree, but I think I would be surprised. I haven't asked you prior to this panel, but for me, sort of pin on glass is a nice placeholder for biometrics. I mean, that's where we will kind of end up. And quite frankly, going back to when I started iZettle back in 2010, I mean, really, even though I'm very subjective here, I would say that the most sort of disruptive thing that we ever took to market was our initial solution that was effectively a small sort of card payment plug-in that you just plugged into your cell phone. And they're relying really on the chip security and sort of leaving PIN aside and using signature as a verification method. One of the schemes didn't really approve that solution, not wanting to mention who, but we eventually we developed a new route with chip and PIN. But I mean, payments has to be simple, it has to be smooth, and whether it's PIN or something else, my personal belief is that what Apple Pay is doing with biometrics and other pay solutions is a great way, and whether it's face or thumb or whatever it might be, a lot of things is significantly better than PIN.
I understand, but the question is perhaps also the impact. I mean, tomorrow pin on glass for you is just directly an opportunity. For you, it's an opportunity, but also a problem to solve with all the people working, doing, producing classical terminal.
Of course, yeah, absolutely. It's a challenge for a company, but I feel that first of all, you can't really go backward. You can't fight against innovation. You need to be part of it. You need to convey it and adapt to that. Otherwise, you're already dead. It's only a question of time. The second comment is merchants are very different. So feeling that one product only, the pin pad to the pin on glass would fit every single merchant, I think is ignoring the reality of the merchants. Some of them, I believe, would still need some terminals because it does provide a lot of value, not only from a security, but for the offline and omni-channel perspective. Some of them, at the end of the chain, or for different reasons, will go pin on glass. And as long as it works, it's good for us.
As we have only 1 minute left, I would like just a word of conclusion of each of you. Perhaps, Jason, you speak a bit less. Sorry, I had a question about pin and glass. So, a word of conclusion of each of you on this panel, because we have the next one after.
So what do you want me to comment on?
Sorry?
What do you want me to comment on?
Word of conclusion on David and Goliath panel we just had, because we just finished in 40 seconds. So, a word of conclusion for each of you.
So I mean, the comment I wanted to make is just that I think around the ecosystem. You know, we've talked a lot about the last few days around open banking and PSD2 and things that are happening in Europe, and this conversation about pin on glass. I mean, we're seeing where, you know, even in the U.S., you know, we actually skipped over mobile and went to chip and pin by inserting, and it's a whole new kind of field for consumers. So I think, like, if we're going to really leap ahead in things, we actually need to take advantage of biometrics and mobile even more, so we can, you know, kind of leverage these new models. And then within our world, in issuing and processing, is this idea of global issuance. So we're not having to go to every single country to certify. We certify once, and we travel across the world.
Thank you. Word of conclusion for each of you, and we go.
Okay, I'll go fast. My view to the title of your presentation is not that it's David against Goliath. It's most probably David alongside Goliath. Because some of us were David and became Goliath. Some of us are David in some of our activities and Goliath in some others. But anyway, at the end of the day, as long as you add value to a very fast evolving world, then you still have some relevance. As I said earlier, the day you stop adding value, then you're dead.
Thank you.
I don't think I have any more wise words to add to that. I think it's a combination.
I would just remind people of a comment that was made earlier in the panel. When our CFO launched us as a public company 10 years ago, he stood up in front of investors and said, there's an $11 trillion cash opportunity. 8 years later, he was presenting to investors, and Visa had quadrupled in terms of its market cap and its revenue. And he said, 8 years later, we've been very successful, and there's a $15 trillion cash opportunity. And so it's still early days in payments. We've got a lot of growth left.
So everything is in front of us. Thank you very much for coming.